Hi, guys. A very good evening to everybody who is tuned into our weekly special live series. It's Money Control Markets Weekly. And like every week, like every Friday evening, we catch up with a fresh new guest for a fresh new perspective on the markets, whether it's fundamental or technical analysis. Joining me today is Pritesh Mehta from Yes Securities to talk about the way markets are likely to behave in the days to come and what are some important cues and themes to watch out for. Pritesh, pleasure to have you on board.
Yeah, thank you. Good to be on the show.
Good to have you on the show. Well, if we look at the way markets have, played out in the last few days, especially today, would you say it was a healthy correction, or should the street be worried about a bear's grip once again, or bears clawing back once again?
I think it's too early to jump to conclusion that we are going to be in a period where market is going to correct sharply. Yes, we can have some correction. It is bound to take place. That's the nature of market, and we need to get used to it. Now, we had a period from 15,600, 15,900 when Nifty did nothing. The main game, the point of focus was the mid cap in the broader markets, and that was a space where money was made. Now thereafter, we had this clean run-up, which was led by largely heavyweight stocks. In fact, the top 10 stocks of the Nifty, they did well. So
Hmm.
now the broader market is correcting. So I think below 16,300 we might retrace back to 15,900, but I won't term it as a start of a fresh correction. It is more of a retracement or corrective move.
When you talk about these top 10 stocks, many of them are, heavyweights like Reliance, for example, that have been lackluster, but they were garnering a fair amount of limelight in the week gone by. Where do you think they're headed? I mean, of course, there has been a significant run-up that was seen in the markets of late, but some of these heavyweights, do you think they will continue to do well?
Now, see, we have to be very selective in which space you are in, even when it comes to the Nifty stocks. So, now what we have done, we have created a top 10 customized Nifty stocks index. So, basically, we have taken the top 10 highly weighted Nifty stocks and created an index out of it. So, the recent run up was largely driven by them. Reliance was a part of this index, but it has not been a big contributor. But again, if you look at Reliance on a standalone basis, I don't expect a bigger move. The stock is not going to go about 2250 levels in a hurry. We might see some sort of short-lived momentum, but that's it. But the real space we need to concentrate on is in the financial space, and now after last two sessions, is it in the FMCG and consumption space, because I think they are going to provide us some outperformance in the coming days.
So within the financial baskets, what kind of stocks and what kind of entities do you like? Is it core lenders or do you like perhaps an NBFC, HFCs or insurance?
And now, when we talk about Nifty Financial Service Index, there's a large category of it. We have the insurance players, also have housing finance companies, but there are a couple of stocks which has got my attention. When I talk about the HDFC Twins, and the second one is the Bajaj Twins. They are certainly looking strong on charts. In fact, if we look at the Bajaj Finance from a point and figure perspective, it has given a double top breakout and a bullish turtle breakout. So if I term it in a non-technical term, I'm expecting a rally of 10% in this counter at least. And HDFC had been under the radar for a long time. It is now time for it to catch up with the other large players.
Absolutely, and HDFC Bank was, in the news as well for lifting of the ban on their credit cards business, the sourcing of the credit cards business. So definitely, that is something to watch out for. Of course, now that you've flagged off from a technical point of view as well, we're getting some comments as well on our platforms, both YouTube as well as Facebook. Can you break it down? What happened in the markets today? Because that is something that has been talked about on the social media, uh, you know, all through the day today. So if you could tell us what happened in the markets and which way are they headed over the near term?
Now, see, headline index does not portray the real picture or real emotion of the markets right now. We are talking about 100 points cut on the index today, but the bigger damage is on the broader markets, that is mid caps and small cap space. Before we dig deeper and try and understand what is wrong with the mid cap space, let's go back in time and look at the relative strength of mid caps versus Nifty. So, from the lows of April 2020, this ratio rallied by more than 30%. So it means mid caps outperform not only for days, not only for weeks, but months together. So the same ratio is now down by just 5%. So these kind of hiccups we are bound to see. Nothing wrong in that, but again, we are not, it is not even too early for them to reverse. So ideally I would stay away from the mid cap space. We mentioned about the large cap stocks, large cap space, which could do well, which can outperform index. So we should be focusing on that. Again, from mid cap, I think it is bound to see some sort of pain going forward. Now, when you talk about mid caps, it tends to bleed a little more than the other stocks, other space. So yes, we could have a bit of correction coming in this time around. There is a price correction also, and there is also a correction in breadth. Now, breadth is the thing which I focus a lot, because if you look at the current breadth of the of the mid cap index, there are 65% of mid cap stocks which are trading about 100 moving average, and this percentage has been reducing since June. Back in June, it was around 80%, 85%. So we are looking at a gradual decline in breadth also, which is a bit of concern for me right now.
Okay, all right. What about banks? I mean, some of them, yes, have been good outperformers, the ones you flagged off. Some have just started to kind of pick up. So, is there a clear demarcation or any, clear-cut banks that you are not very bullish on or you'd rather stay away from right now?
And that's the reason I mentioned, from the
Mm,
space which could do well, I focus more on the financial Nifty Financial Service Index, and Nifty Bank has been, underperforming. It has been a big pain point right now for markets. It has failed to cross about the barrier of 36,400 on the upside, and that is the big concern for me now. If it goes below the levels of 34,400, then bigger correction would set in. So I think even if you look at the ratio of Bank Nifty versus Nifty, it is trading below the lows of April 2021. So banks at the space is an area which could provide us big troubles going ahead. So ideally, we should avoid that space, and try and find some outperformance in the consumption and the FMCG space which you just mentioned.
okay. FMCG definitely, I would like you to elaborate on because it has all this while been one of the slow movers or one of the underperformers, and finally there seems to be some kind of a meaningful, significant up move. Is this sustainable? Do you see these heavyweights like a Britannia and HUL sustain this kind of an up move that they've seen?
In fact, we don't see that kind of big moves in this space for a larger period of time. So it's good to see them making some good percentage returns. But I still
Yeah.
believe, keeping up at ITC is a different ball game altogether. I don't want to talk about that stock, but Britannia is a one stock which looks interesting. We are talking about large, big base breakout in this counter, which can come into play about 3,950. So I'm talking about consolidation at the top for more than a year. So yes, this stock is heading towards the levels of 4300 levels. Apart from that, if you look at something like Coalpal, from the consumption space, we like Asian Paints also. So these are stocks which could do well in maybe next couple of weeks.
What about metals? I mean, we've seen very wild swings when it comes to most of these metal names. Either they're really, showing a fair amount of strength, or there is a massive, downtake and down spiral that comes and takes these stocks down crashing. So there are very extreme periods of wild moves. What is your view? Where do you stand when it comes to investing or trading with some of these metal names?
Very interesting question, because it has been on everyone's radar. The kind of run up
Yeah.
these stocks have provided, it is bound to attract attention. But again, if I look at the ratio of Nifty Metal Index against Nifty, it has reversed from the peak of May 2021, and now it is slanting lower. So I feel that we are going to enter a period where this space is going to underperform Nifty. And when we look at the dollar index, it is, I think, going towards the levels of 94.3, 94.4 levels. So around, I'm not comfortable when dollar is moving so rapidly. I'm not comfortable holding the metal stocks. In fact, if you look at the metal index on a standalone basis, I think it had a strong run up. It's time to book profit. When you talk about the individual stock names, something like JSW Steel, Tata Steel, it might go through a bit of profit booking in near term. And when I say about profit booking, the downside percentage could be could be big enough, and it can be in matter of days.
Oh, all right. I was just looking at some of our live viewer comments as well coming in. One of our viewers wants to know your view on cap goods space. Specifically, if you could help him out with Cummins as well, because I think he's specifically interested in that. But overall, if you could give us a picture on, some of these bigger cap goods names like Cummins, Siemens, L&T perhaps.
Yes, in fact, we mentioned about identifying leaders in this market earlier in the conversation. So this cap good space looks promising. L&T is one of the leaders. I think this stock has had not done anything in terms of providing an upside rally, and now in last couple of weeks it showed that grit and gumption of going higher. So yes, in last few days it has corrected a bit, but I'm expecting the stock to find support around somewhere around 1560, 1550 odd levels, and from there on it could provide a good opportunity to ride on the rallies on the upside. And coming back to Cummins, the stock made a peak around the levels of 1040. Thereafter it has been struggling. We can see stock retracing back to the levels of 950, 940, and we have to wait for some stability to emerge. But I feel the stock over a period of time could do well.
What about sugar stocks? Have you been looking at what's happening in that basket? Because many of these names that typically were quite dormant for the last almost a year have suddenly started seeing a lot of action.
Now see, when I look at the international ethanol prices, the chart of ethanol price, it is trading on multi-year high. Uh, possibilities are that this particular space, when you talk about stocks like EID Perry, Dhampur or Barramuchini, they could go in a period of sideways correction or sideways consolidation, but we
Hmm.
need to be in this space with a longer horizon, long term horizon. Then only we would be able to make money. I feel that once when the levels of 365, 370 are taken out on Balrampur on the upside, and the stock is sustaining, we're talking about 25, 30% return in this counter.
Okay. What about some of these other sectors like a paper, textiles, all of them have been on fire of late. Do you think this kind of an up move and this kind of frenzy will sustain in times to come as well?
In fact, I think if you're getting money, we need to take it off the table and move out. Again, there are more mid cap and small cap related stocks, and I'm expecting bit more correction in this space. So I think we need to be quick in these kind of counters. Make money and quickly take your exit.
Okay, so you would rather not sort of, stay invested or, look at these sectors for
Yes.
the long haul.
Yeah.
But if someone were to go stock picking, say, some a retail investor who wants to sort of, allocate some portion of their portfolio to small and mid caps, what kind of stocks should they go picking at the current juncture, given that many of them have, really, really run up already?
But that is not the point. If a stock has gone up by 50% in last couple of months when mid cap index was doing really well, it certainly has more legs to go even higher by 100%. So that logic should be kept aside, and we should be able to focus on the outperformers, outliers. The stocks which are outperforming Nifty mid cap basket. So when I look at them, something like Bata comes to my mind, something like Tata Power comes to my mind. The Tata Power recently has corrected. The stock had a rally from 100 to 135 levels and started correction. But again, if you're getting this stock again, at lower levels, somewhere around 120 odd, and again, it would be a good opportunity because this stock could provide a 40 to 50% move maybe next couple of months.
What is your sense on Reliance Industries? Earlier this week, the stock did fairly well, and today we saw it being one of the laggards on the index. Have you tracked it closely?
Yes, I know. These stocks tend to, deceive us a lot. Again, it was one of the major mover back in 2020, second leg of the, in the last 6 months of 2020. Thereafter, the stock has been completely sideways. It is not breaking below 1850 mark, not going above the levels of 2300. So yes, it is providing a bit of trouble. But the important thing is to understand whether the stock is showing signs of outperforming Nifty or not, and that's my real question is, the stock is not showing any signs of outperforming the benchmark index. So we could see some spurt of 4 to 5% every other day. But I'm talking about a big outperformance from here on, and that is what the rise is lacking right now. So I won't be there
Rather,
for a longer horizon.
yeah, please go on.
So I won't be in this counter from a long point of view, from a long term point of view. About 2300 levels, it would be a compelling case. But as of now, we should not be getting into this space, into this stock.
So, which space looks attractive at this juncture to you? I mean, of course, you've talked about financials, but otherwise, from a from a rookie or a retail investor standpoint who's just entered the markets, what are the pockets that he could go stock picking from?
Yes. So, we mentioned the bank nifty is a big underperformer. It is going to give us plenty of trouble going forward. Apart from that, Reliance is not going to provide big moves in the near term. So the stocks or the space which would outperform Nifty, the last 3 days we have seen the FMCG, the consumption space. These are the pockets where we could find strength coming in. So when I talk about the consumption space, I believe in something like Asian Paints could do well, even Berger Paints could do well. These are the stocks which can provide strong returns going forward as well.
Okay, fair point. And what about the ones to avoid? Of course, you said you believe that midcaps could see further correction and they could be further pain from some of these broader market stocks. But overall, sector-wise, which are the ones to avoid right now?
Metals is the one, the way the dollar is rallying right now. The 93.47 was a peak back in March 2021. Thereafter, the dollar index started correcting. Now it is trading above the same level. So the big sign of concern for me, metal index, has a big correlation with the dollar prices. In fact, if you look at the even emerging market indices, if we include China into that basket, it is underperforming, and if you exclude China, it is doing well. But again, it's the big concern for me is metals. It had a good run up on YTD basis. It has gone up by 60%. But I think it is bound to witness some profit booking.
Okay, I'm just looking at some more comments that we have coming in. Do you have a view on the mid-cap IT space, and especially if one were to compare the stocks in mid-cap versus stock in large cap? Of course, the overall IT basket itself has been one of the outperformers, but do you have a preferred choice?
Yes, a good question, because yes, IT space has done tremendously well. Whether you look at large cap or mid cap space, they have done well. But again, from this space, Naukri Info stands out to me. The stock is on the verge of giving a breakout on the upside. We can see a rally of 10% from here on. Excuse me.
Yeah, go on, please.
Excuse me.
Yeah, Pritesh, hi, you can hear me, right?
Yeah. So
Okay,
yeah,
you're
Info is
back.
the one which I'm looking out for. The stock has good structure in place. In fact, this stock has not participated in the mid-cap IT rally. So this is the one which I'm keenly looking out for. Once it goes above 54, 50 levels, then we can see a 10% rally easily.
Actually, we I think your line got snapped. If you could repeat the stock that you were talking about from the mid-cap IT space, just for the benefit of our viewers once again.
Yes, the first one is info edge and second one is would you mind tree.
Okay. Okay. So these are the two stocks essentially from the mid-cap IT space that you like. We have some questions coming up on TVS Motors as well, but I would like you to address the overall auto space because that has been one of the biggest laggards and a bit of pain point. Of course, there are even the fundamental triggers over the near term are quite weak. There is a significant shortage of semiconductors. There's demand issues as well. There are a few clouds sort of that are on top of the auto sector right now when it comes to the fundamentals. But if you look at the technicals purely, which way do you think some of these OEM stocks are headed? Of course, if you could shed light on TVS Motors, that would be great. Our viewer was also asking. But otherwise, if there are any other picks and preferences that you have within the basket.
See, this space auto index is underperforming Nifty for quite a long time. Since start of the year, I'm expecting this trend to continue. When you talk about these standalone charts, standalone stocks, TVS Motors, it is a big disappointment. And in fact, if you look at the current structure, we can see more downside coming in. The levels of 500 is taken out. We can see a rally, correction back to 450, 460 levels.
But any other picks you have from the auto space, or are you cautious about it for the time being?
I think this space is likely to underperform going forward.
The entire basket, ancillaries, or
Yes.
even okay. All right. Well, I hope that sort of answers our question, our viewers' question as well. But there's an interesting question coming in, which typically we also ask our guests. One of our viewers is asking if I want to invest around 50,000 rupees for about 2 to 3 months or 2 to 4 months in this volatile market. What kind of stocks should I pick? So, if you could, help us understand for somebody who has a very strict short-term horizon, which could be some exciting bets to look at.
Again, we are expecting big pain in bank nifty, a big pain in mid caps. So these are the complete no-no space to be in. Again, defensives could do well, and I am excluding pharma from it. So your consumption and FMCG space could do well. Something like Dabur, something like no, Britannia. For Britannia, you need to have a 6 months view as we discussed. So these are the stocks which can do well really going forward.
Okay. What about white goods? I mean, now that we have the festive season coming in, typically, appliances sales shoot up, and other discretionary products as well are typically in demand. Of course, last year was a complete exception and a complete washout. Right now, with several markets and states opening up, do you believe one should look at some of these appliances in retail place as well?
The one stock which I like from this space is Havels. In fact, it had a strong run up,
Okay.
and from the base of 980, it has rallied to almost 1250 odd levels. Thereafter, it is consolidating. In fact, if you go back in time and look at the peak, which was in the month of Feb 2021, it marked the same peak, and now it's consolidating. It's showing a sign of strength. In fact, we can see stock about 1250. The stock can give a rally of around 12 to 15% going forward.
Okay. Well, Havells seems to be it. What about chemical stocks? We have a viewer coming in who wants to know, are there any chemical stocks that would be a good bet for 1 year?
Again, thanks for a big higher horizon because this space is
Yeah.
going to provide this volatile moves. Something like Tata Chemical, couple of days back, it was trading around 900 levels. Now it's 830. If you are going to be in this space for a very short term trading purpose, you could be butchered if you are getting in that wrong trend. But again, Tata Chem is one space, one stock from this chemical basket which I like a lot. In fact, the stock has given a big base breakout. And I think if someone is willing to hold on for more than 6 months of time period, then we are talking about a rally towards 1400 also.
Oh, okay. Well, Tata Chemicals definitely then something to look at. I hope our viewers are taking note of that. But other than Tata Chemicals, let's say someone were to look at it for a longer term horizon, say 2 to 3 years as a investment bet in their portfolio. Any other names which are looking attractive?
Okay, from again, from if we, so what we have done to understand the chemical space, we have created a customized chemical index in which the constant is something like Deepak nitrate, and so this Navin fluorine. But Deepak nitrate looks really interesting. Not only the stock has done really well in last couple of weeks, but again, I don't expect the stock to witness a strong corrective move. If you look at the overall structure, it tends to provide retracement moves which are very short-lived in nature. So if you're getting this stock around, say, 1950, levels as per my projection levels, it's a good time to get into the space and hold on for at least 7 to 8 months. Then we can see a rally of at least 25% coming in.
Okay. Do you track Vodafone idea at all? I mean, last week, or rather the last weekend, that come out with the Q1 report card posting a significant amount of loss, and several brokerages continue to be cautious about its prospects. How does it look on the charts?
When we're talking about telecom stocks, let's focus on Bharti Airtel. It will give a better return. Let's not speculate about Vodafone idea. It's something is beyond our
I think a
understanding.
lot of
So let's
I think a
focus on
lot of
this.
I think a lot of traders and investors are losing money, or they probably are struggling with it. That's why we often get a lot of questions on social media with respect to Vodafone. But yes, of course, we'd like your view on Airtel as well.
So just for the audience, for idea, if I look at long-term structure, I don't see any immediate upside on the horizon. Once the stock gets clears the level of 14, or 13.5, then we can see the structure is changing. There is a reversal in structure. But if you are going to be focused in the telecom space, Bharti is the one stock we need to keep an eye on. And so if someone is willing to bet an idea for like 1 year or so, then rather than being in idea, let's switch to Bharti Airtel. We're talking about a stock which is breaking out of base of 13 to 12 years. And this stock is a
Hmm.
right doubler counter. So I won't be surprised if it goes to 1400 also in next 1 year or so.
Well, just one last question before we let you go. We've already pressed on time. So quickly, then your view on pharma, because we've not touched on that sector, and it has seen its own highs and lows, mostly lows, I would say, in recent past. So, what is your view and assessment of this basket?
This space is likely to underperform going forward also, because if we just look at go back in time and look at the lows back in the month of July, so it is now trading at the same level. So on standalone chart, if these lows are broken, there could be more pressure. And again, on relative basis, it is underperforming Nifty by a big margin. So as I mentioned earlier, in this kind of scenario, we have to be with leaders, and pharma certainly does not fit that category.
Okay, I hope our viewers are taking note, and they will, place their bets and strategies accordingly. Thank you so much for taking time out and for
Pleasure.
talking to us in detail about a host of sectors and addressing our viewers' questions and queries as well. Thank you.
Thank you. Pleasure.